my name is Nicole, and I'm a technical analyst and private investor. And this week I picked out three charts of the energy complex. I know most people are bagging on about the stock market's disconnect with, Main Street reality. That's just too complicated to go into. But instead, I want to see what how the energy markets are looking at the prospects going forward. So my first chart is of Brent crude futures. I've deliberately not chosen New York because from what I understand, both NYMEX crude and COMEX gold contracts have apparently got certain issues with the clearing of these contracts. So here we go, it's a Brent chart, it's a weekly chart, and on it I've added a 50 and 200-day moving averages, and unsurprisingly these suggest one should be short, despite the massive bounce since March's low. For 5.5 years, this thing has traded below the psychological level of $100. I think OPEC Plus, who are still dreaming of something closer to that than where we are today, I mean, they can just dream on, can't they? They're threatening another OPEC meeting. I don't know what they're threatening to do, but it's just not happening. I mean, since October 2018, it's been clearly in a downtrend. In March, it plunged below secular support at $25, around 25. Nothing's, set in stone here. It formed a massive spike low and a doji candle on the monthly chart there. And so, the bounce back is absolutely commensurate with the catastrophic plunge that we saw earlier. What I think we're going to do now is establish a new trading band where $25 is definitely the bottom. And then the top, we're coming up to an area of resistance, again, secular resistance. So I'm looking at really long-term price levels to go back to and compare to. And the top will probably be at about $45 max, and certainly not above 50. I don't see it going above 50. And then we're going to gutter around for the rest of the year, roughly in that band. So, the bears will be bearish and the bulls will be bullish. And then at the end of the day, you just think, oh, well, why did I bother? So I've decided on my second chart to look at the price of gasoline, because obviously this is related to and important in terms of the price of crude oil. Now, unleaded gasoline in the States has not been going that long, so I don't have masses and masses of history. But in March this year, we hit a new record low of a mere 37 cents a gallon. This is the futures contract price. Again, the subsequent rally was good. It was strong. It underlines the sort of excess bearishness that had set in March. Now we're edging up to an area of resistance at about the $1.25 mark. It might blip above that just a little bit because the driving season, as it's called in the States, starts on the 4th of July. The big question is now whether the people will actually jump in their cars and go places. I certainly don't see gasoline prices going above $1.50. I likewise don't see them going below 80 cents. So another one establishing a new range. My third and final chart is that of natural gas. And this is a monthly chart, like the gasoline was, I should have said, a monthly chart. Now this, as you can see, is a tiny shadow of its former self. It's scurrying along the bottom and struggling close to the lowest levels since 1990. I mean, that's 30 years ago, and we're struggling to hold at that kind of price. I see the chance of a bounce, let alone a meaningful bounce, as negligible. I mean, and this is really a whole global industry that is in serious trouble. That's the end of my charts that I brought for you. I look forward to seeing you again next week when I hope I'll manage to scurry around myself with some interesting charts for you.